The street reaction on TCS numbers. The numbers have come out just after market close, and Rima standing by with all those initial details. Rima.
Thanks so much for that. So we have the margin performance with us. The EBIT margin for the company has come in at 25.2% versus the CNBC TV 18 poll of 24.7%. So straight away, there is a margin beat. Margins have also improved on a quarter-on-quarter basis by about 70 basis points and higher than street expectation. There is a restructuring expense, which is at 1,135 crore rupees. This, remember, perhaps is on account of the 1,200 people that the company had to lay off because they were unable to reskill them. So there was expected to be a restructuring exercise. So the impact of that is 1,135 crore rupees. What I'm unsure right now is where it has been accounted for, whether it's been done below the EBIT line, which sort of kind of makes sense given the margin performance, but we rate by for that. The company's top line has come in at 65,799 crore, and that is an increase of 3.7%. These are the only numbers that we have right now. Margin beat 25.2%. The company's rupee revenue growth has gone up by 3.7%. The number that we're awaiting right now is the dollar revenue growth or the constant currency revenue growth. And the expectation is that after 2 quarters of a decline in the top line, this quarter we will see growth. So the expectation is about close to about 0.3% constant currency revenue growth, but we'll wait for those numbers to come in. The statement coming in, there is broad-based growth and disciplined execution delivers a strong Q2. The company has announced strategic investments, a new business entity to build world-class AI infrastructure, 1 gigawatt capacity AI data center in India. The board has also approved the acquisition of ListEngage with deep capabilities in Salesforce. So there is an acquisition. Again, the size is not known. I mean, I don't have this number of the size, but it just seems, very recently the company had also announced they had hired Mangesh Sathe as a chief strategy officer, and his role was to, along with conceptualize the strategy, look at innovation, etc., but also look at M&A. And remember, compared to many other companies, TCS has not been very aggressive on acquisition. I think the last big one happened in 2018, but now it looks like the company has approved the acquisition of ListEngage with deep capabilities in Salesforce. And here's the important number. Constant currency revenue growth is also a beat, 0.8%. This is higher than expectations of 0.3%. So this is actually looking like a good set of numbers. K. Krithivasan is also making those statements. Okay?
Right, Rima, take that point entirely. That 0.8% versus a growth expectation of 0.3% in the constant currency will definitely have the street excited. We'll probably try and connect with some analysts, etc. as well. But meanwhile, 0.8% in constant currency growth goes down as a beat. EBIT, like you pointed out, margins better than what the street was expecting. The net profit out there, the reason why it's green despite a meet is because there is an 1,100 crore rupee restructuring expense. So if you've added that back, then the net profit also would be a beat on TCS. Alongside that, they've made comments on making a small acquisition as well as engaging on artificial intelligence. So we'll obviously speak a little more on that too. The stock was an underperformer, but fairly well bid in today's trading session going into the numbers. In fact, over the last few trading sessions, we saw the IT stocks do well as well. Will that cause a flutter of a purchase in all the other stocks as well or not is something we'll most definitely keep an eye out on. Piyush Pandey of Centrum India joins in now. Piyush, 3 key numbers that we have. 0.8% constant currency growth for TCS. The street was working with a number of 0.3%. The EBIT margins upwards of 25.2%. And there has been a restructuring expense. And if you adjust for that, the net profit too, fairly above street expectations. What do you make of TCS's numbers? And more importantly, what do you make of, the IT space going from here on?
So broadly, I would say numbers have been slightly ahead of expectations, both in terms of revenue growth as well as EBIT margin. And in fact, deal TCV also have been healthy at $10 billion. So overall, I would say these numbers would be taken well by the street. And now it depends on what the management guides for outlook for the coming quarters. And so that will be something to watch out for.
Okay. Piyush, generally when you talk about TCS, they don't really specify guidance. they don't quantify a guidance. But if you look at the expectations, a couple of MNCs were actually expecting a degrowth in constant currency terms. In fact, Nomura was actually expecting a minus 0.5% constant currency degrowth. What was your own expectation going into this particular quarter, and how does it compare, especially when you look at the CNBC TV18 poll? We were just expecting a 0.2% growth. It has come in at 0.8%.
Yeah, so as per my estimates, I was expecting close to 1% CC growth sequentially. Okay. And my EBIT margin was roughly close to 24.7%. So margin has been significantly better, much higher compared to my estimates. And revenue growth, I would say, broadly in line as per my estimate.
Right. Piyush, we also have the total contract value. That's coming at around $10 billion. Last quarter was $9.4 billion. So it's been an inch up from the previous quarter as well. Were you having any expectations on TCV, and how would you read $10 billion as a TCV for the company?
So broadly, we were expecting something in the range of $7 to $9 billion. But 10 definitely looks better compared to the sort of general expectation. But generally, TCV's values are generally volatile on quarter-to-quarter basis. So it looks good, yeah. So overall numbers are good compared to base expectations. Yeah.
So rough back of the envelope, would you expect everyone else on the street to upgrade their estimates, or maybe stand by and then look at a couple of quarters more before making a change in their estimates and perhaps their structure also?
Yeah, maybe people would like to wait for maybe 1 or 2 quarters before taking a view that numbers are only improving trajectory.
All right, Piyush, thank you so much.
But I think with this current number, I think broadly we can see some upgrades in EPS. Yeah.
Okay, Piyush. Piyush, just another question. Last couple of quarters, there was the impact of BSNL that had a negative impact as far as margins are concerned. This particular quarter, has that gone away, and has that aided the margin uptake sequentially?
Yeah. So obviously BSNL deal has got completely ramped out, and right. Any contribution from BSNL deal would be negligible or close to zero, and that also led to a slightly higher margin for this quarter. Yeah.
All right. And what would you make of this investment that the company has made in, AI, or the announcement that they've made, the strategic investments where they will build 1 gigawatt capacity AI data center in India, and they will acquire ListEngage with deep capabilities in Salesforce? Would you think of it as an important one? Anything that moves the needle?
It looks good because generally there was a criticism or thought that Indian IT companies are not investing in renewable tech ideas and obviously this decision would be taken positively by the media.
All right, Piyush, thank you so much for joining in and giving us your quick thoughts. So from what we understand from Rima as well as Piyush and the general sentiment that the company has been posting through the results, TCS numbers slightly ahead of street expectations, all the steps in the right direction. Now it's over to the management to speak about the demand environment, the guidance for the next few quarters, for the street to actually take an investment view on the IT stocks, which going into the results season has been fairly well bid because of the underperformance of this sector over the last few months. Take a short break, come back. We'll be back with more news and updates on CNBC TV18.